In a backtest over the last 20 years, this expert advisor turned $10,000 into almost $9 million with around a 30% drawdown. These results were tested under pessimistic conditions using real tick data with increased spreads and commissions. This is my own expert advisor called the Gold Breakout Engine. In this video, I will walk you through exactly how it works and how to set it up step by step. I think the best way for you to understand the strategy is by downloading the demo version of this EA and then doing the whole setup procedure together with me. To download the EA, you need a MetaTrader instance where you are logged in, go to Markets, search for Gold Breakout Engine and click the download demo button. After it is downloaded, it should appear in your navigator and in your strategy tester inside the market folder. But let's talk a little bit about the strategy before we jump into the whole setup. The EA consists of 4 different strategies. One of the strategies is a range breakout strategy, trading a London-style breakout, whereas the other 3 are a diversified basket of support and resistance breakout strategies. These strategies together form a portfolio. Each strategy manages its own risk, including its own drawdown and daily drawdown limits. On top of that, you can also define a portfolio-level drawdown limit, which applies to all strategies combined. The overall priority of this EA is equity protection. But to understand how useful it is for that, I need you to watch this video until the end. Now let's see how you can set this whole EA up. The input parameters are divided into groups. The first group is the display group. Here you can set the color theme of the panel. The colors are similar to those used in the manager. You can also choose whether you want the chart to be transformed into a cleaner, more modern style and whether open trades and orders should be displayed on the chart. Then we have the general settings. Before moving on to these, let me just state a revolutionary property this EA has alongside all my other EAs. Most well-known EAs on the marketplace use fixed lot sizes, or they base position sizing on the full account balance. I think there is a better way to handle allocation, by allowing you to invest any amount into each individual strategy. This investment will be the only equity the individual strategies see. They will not touch the remaining account balance. The drawdowns are also calculated based on this equity. The first important input here is the investment type. There are 2 options. One option is balance percentage-based investment. In this case, each strategy uses a percentage of your account balance as its initial allocation. The other option is fixed monetary investment. Here, you directly define the exact amount you want to assign to a strategy in your account currency. The reason I said initial allocation is that the equity of a strategy can grow if the strategy does well and fall if it loses. These inputs are only used at the start of the EA to allocate capital to a strategy. So in practice, if you want to allocate a portion of your balance, for example 20%, you would use the percentage-based option. If you want to assign a fixed amount, for example $2,000 or euros, you would use the monetary investment option. After that, you can specify a magic number, which will be used by all strategies to identify their trades. Then you can set a global drawdown limit and a daily drawdown limit. These apply to all strategies combined. And once either of these limits is reached, the EA will close all trades and stop every strategy, either for a day or overall. Then you can set the risk level. You can choose anything from institutional to speculative. This setting only affects the risk taken per trade, nothing else. For example, if you choose institutional, the position sizes will be smaller. If you choose speculative, the trades will be larger and therefore riskier. It's important to adjust the drawdown limits accordingly. If you use a higher risk setting, drawdowns will be reached faster, so the limits should be set with that in mind. In general, I would recommend using the lower risk settings, but this depends on your account size. You also have the option to use a randomizer, which is defined in points. This is mainly useful for prop firm challenges. When enabled, the EA slightly shifts all important levels within a given range. This includes the entry levels, stop loss, take profit, trailing stops, and even the pending orders. So instead of using exact fixed levels, the strategy operates within a small randomized range around them. After that, you will see the 4 individual strategies. For each one, you can set the allocated investment amount, the drawdown limits, and a comment to help you identify it. If you are using balanced percentage-based investment, you simply enter the percentage you want to assign to the strategy. Otherwise, you enter the exact monetary amount you want to use. For example, with a $10,000 account, assigning 20% would result in $2,000, which is the same as directly setting a $2,000 allocation. After that, you set the drawdown limit and the daily drawdown limit for the strategy, and you can also add a comment if you want to identify it more easily. Then you repeat the same process for strategy 1, 2, and 3. And that's basically it. That's how you set up the EA. Now, each strategy also has its own drawdown and daily drawdown limits, and both of these are calculated based on the strategy's own equity. So for example, if you allocate $2,000 to a strategy and set a 10% drawdown limit, that does not mean a 10% drawdown on your entire account. It only applies to that specific strategy. So in this case, the maximum drawdown will be around $200. So if your total account balance is $10,000, that corresponds to only about 2% of your overall balance. If the strategy was successful and managed to grow the $2,000 into, let's say, $10,000, the drawdown limits will adjust with it. Doing this across all strategies allows each one of them to have room for its own drawdowns, while at the same time keeping the overall portfolio drawdown under control through diversification. This approach is useful because it leaves room for other strategies and even other EAs as well, and makes it possible to build a truly diversified portfolio. Another powerful feature of this EA is its user interface. Whenever you run the EA, a panel appears that shows all the relevant information about both the portfolio and the individual strategies, and it also gives you full control over the system if needed. You can monitor things like the current and peak equity of each strategy, realized and floating profits, drawdowns, and the current state of each strategy. You also have the option to disable buy or sell trades for a specific strategy, or even disable the entire strategy itself. If you need portfolio level control, you can also enable or disable trading for the whole portfolio directly from the interface. All of these features are available in the strategy tester as well, so you can experiment with them and see how they behave. I know this may sound a bit complex at first, but once you understand the main idea behind it, you will start to see how powerful this setup can be. If you have any questions, feel free to ask them in the comments, and I'll do my best to answer all of them. Now let's run a backtest. To get results that are closer to reality, I recommend testing with real tick data, for example from Dukascopy. It's also important to use a spread that is at least twice as large as your broker's typical spread. If you are testing with open, high, low close data, I would recommend increasing the spread even further. For example, here I will use a spread of 25 points even though the actual spread is closer to 10. You can also evaluate individual strategies. For example, if I want to see how strategy 3 would have performed on its own, I can assign 100% of the capital to strategy 3 and set the allocation of the other strategies to 0. Then I just run the test. Now let's talk about something you don't usually hear from MQL5 sellers: drawdowns and limitations. First of all, there is no risk-free strategy. If you purchase this EA and run it on a live account, there is always a possibility of losing money. But this is true for all EAs available on MQL5. Now let's look at some drawbacks that are specific to this EA. The first one is trade frequency. Since the system focuses on major levels, it does not trade very often. This is especially true if you don't invest in the range breakout strategy. There can be periods where it doesn't open any trades for several days, sometimes even for a week, although that's not the typical case. So if you expect the EA to generate profits every single day, this is probably not the right type of system. The second drawback is that it does not use any recovery logic like grid or martingale. This means that losing periods and drawdowns can and will happen. The goal of the system is long-term performance, not short-term consistency, so it's designed to exploit its edge over time. The third drawback is the capital requirement. Each strategy needs at least $200 to function properly with high-risk settings. To explain why, let's take an example. If you have a $1,000 account and allocate $250 to each of the 4 strategies, each one will trade with a minimum lot size of 0.01, which is typically the smallest allowed by the broker. Now, if you only had $200 and tried to split it across all 4 strategies, each one would get around $50 to $75. However, the strategy would still trade 0.01 lots because it cannot go lower than the broker's minimum. This means the position size would be too large compared to the allocated capital, which increases risk significantly. Because of this, if you are working with a small account, for example around $200, it makes more sense to run only one strategy instead of all 4. Another limitation, even though I personally see it more as a constraint than a real limitation, is leverage. If your broker offers lower leverage, you may be limited to more defensive settings. Higher or more speculative risk levels might not be available simply because the strategies would not be able to open positions with larger volumes. Now that I have talked about the limitations, let's also look at the positives. The first one is capital protection. The EA continuously checks on every single tick whether your drawdown limits have been reached, either on a strategy level or on a portfolio level. If a limit is hit, it will automatically stop the affected strategy or even the entire portfolio if necessary. The second one is control. Even though this can be a double-edged sword, I see it as a major advantage that you can manually stop trading at any time without breaking the logic of the system. I wouldn't recommend using this too often, but in cases of extreme market conditions, you have the option to pause trading and then continue later. The third one is diversification. Running 4 strategies together already provides more diversification than relying on a single system. On top of that, this EA can run alongside other EAs as well, simply by allocating less capital to each strategy. I haven't really seen another EA on the MQF5 marketplace where you can essentially invest in individual strategies and let each one of them grow their own internal equity over time. The importance of this kind of diversification really cannot be overstated. The last and most important point is performance. The results over the past years have been very strong. The tests were done under conditions that are actually worse than what I experience in live trading. I used real tick data, applied a fixed spread of around 0.04%, which is higher than my broker's typical spread, and I also included a $3.5 commission. Even under these conditions, the strategy consistently maintained a profit factor above 1.5, and the Sharpe ratio also looks very promising. The price of this EA may change over time. It will adjust based on the live performance I achieve and the demand for the product. If you are interested in the EA but still unsure, feel free to reach out to me on MQF5, send me an email, or join my Discord server. I will do my best to respond as quickly as possible. The most important thing for me is that you make an informed decision. Now that's it for this video about the Gold Breakout Engine. Let me know in the comments what you think about the EA and the overall framework behind it. See you in the next one. Peace. Come and get gang. I mean, you never get you with my bad and bad. Cooking up with the booze. My niggas is sad.